Good evening, everyone. I think I'm going to try to be short because the evening has been quite long. Unfortunately, the topic might be a little bit less, I would say, interesting in the sense that we will talk about money. So maybe not all of you are interested about money, but I think it's an important thing in life. I'm going to start with a little bit of my experience and where I'm coming from. I've worked in finance for quite a long time, and I started off trading stocks myself, as maybe some of you have done in the past. First trade was nice. I made a little bit of money, invited my ex-girlfriend to the restaurant, and I was very proud of it. Second experience was much less, I would say, fruitful for me. It was during the dot-com bubble. And I lost some money, which as of today is not really important, but at the time it was a big amount of money. So for 2 years, basically, I stopped trading and said, okay, I'm not good at it. And then in 2002, I said, oh, I'm going to go into that again because I was really passionate about it. I still lost money, and it's really my start in trading. Since then, what I've done is that I've started to learn and be a little bit more professional about it. I started reading books, and the importance of books is that you're starting to get experience from others. So you are accelerating your own experience. I really was passionate about it because it became my day job to be a trader. And I did that in 2005. I ran a small team at BNP Paribas, running 4 billion of funds with 3 fund managers with me. And I made money during the crisis in 2007 and 2009. But I was still doing this, I would say, from my guts. Not with some trading rules, not some, let's say, systematic way of doing things. And I was lucky enough to meet some guys who basically was working in the trading floor and who started to taught me how real traders are making money. The way they do that is that they have some tools that helps them make decisions. And basically since the last 10 years, what I've done is that I've developed such tools and I've traded them. In 2013, I decided to leave the bank because I was bored about a big organization, and I was really interested into getting for some, I would say, entrepreneur, experience. And during this time, I met Arnaud, who is here with me tonight, doing some executive program at the École Polytechnique, which is the French MIT, and we did a big data executive program. So I was quite interested by your, I would say, explanation at the beginning with the false positive, because this is something that we went through. Basically, as of today, NapoleonX project is about this trading algorithm. So the one that I've really developed over the last 10 years. And it's not only me, because we are going to go into an open source model. The idea being that I'm not the only one that is able to develop models, and there are plenty of people who have this kind of capability. And the idea is to gather all these forces together in order to produce something that will be of interest to people holding money. So now, what's the link with cryptocurrencies? As we know, cryptocurrencies have really started to emerge, I would say, as assets or as currency for the last 12 to 18 months in terms of value, not in terms of the technical aspects, because obviously it dates back more than that. But the value has really started to pop up over the last 12 to 18 months. Now, almost all, I would say, institutional investors and most of the people, of course in this room, but also in the street, are starting to get attention with what is happening in the Bitcoin market. And our vision is that because this kind of blockchain technology and what is associated with the blockchain technology, the crypto assets, we truly believe that because there is a true need for the blockchain technology, especially in corporates, where you have a lot of projects going on right now of organizations trying to find ways to optimize what they are doing internally using this new technology and see how can they embark this technology and do something about it. If all basically these corporates are starting really to exploit the blockchain, and we know that there are some limitations as of today in terms of the speed of, let's say, transaction that you can process, but I'm pretty sure, as it was explained earlier, there will be plenty of new ideas that will allow us to increase basically the speed of doing transaction. Associated with this basically technology, you have the currency. And the currency, at some point, will become much more important in our daily life. If you think about it, this cryptocurrency, you can use them everywhere. It's like a world currency. It's not backed by central banks. It's backed by all the nodes. So it has a lot of very, I would say, interesting, feature for everyone to use. So we truly believe that there will be an explosion in the cryptocurrency and that it might replace some days, of course not tomorrow, maybe not in 10 years' time, but it might replace some of the currency that we are experiencing right now. Now, if you have a currency and you need to do spending using this currency, you need also to do planning. And NapoleonX project basically is about planning your investment. How do you manage this money? Basically, if you have euro, you don't keep your euro at your bank account. You're trying to make some money out of your euro before you're spending actually the euro for your own purposes. And so the idea that we have is that we need some actors, some companies that will be able to manage cryptos for people, because most of the people don't want to manage money themselves. What we have in mind, basically, is just to replicate what is happening in the fiat world, in the crypto world. You have a lot of management companies that are able to manage your fund for you, for your retirement, for example, and there will be a similar need in the crypto space. And NapoleonX project basically is about that. The way we want to focus on, let's say, managing money is using systematic strategies. There are plenty of ways that you can manage money. You can either decide in the morning that you're going to buy this stock or buy these bonds, or you can have a systematic set of rules that you will follow during your investment process. And this is just one example of what happened in the real world. Since the last crisis in 2008, basically, you've seen a tremendous increase in what we call smart beta funds, which are basically systematic funds. Why? Because let's say, the discretionary trading has proved its limits for most of the people, or for most of the asset managers, I should say. And it's been replaced by something that is much more automatic. Now what we see is that we believe in the emergence of what we call bots, which are basically automats that will do the trading for yourself. You just have to program them in advance. Of course, the discriminant factor will be how good are you at developing a new algorithm, and will it basically stand over time regardless of the market conditions, because we know that market conditions are always evolving. There are always new news. How do basically your algorithm react to this news? But as I was showing in the previous slides, basically you are starting to see a diminishing pool of discretionary trader. First, because if you look at what happens in the banks, most of the prop trades or the prop trading desk have disappeared. There was a news sometimes a few months ago, I think, for Goldman Sachs. They used to run an equity desk in the US, which has 600 people It was back in 2000. A few months ago, there was a news article, and basically this very same desk, so doing exactly the same thing, they were done to 2 people, just by automatizing a lot of the stuff that they were doing before. So I don't think we should fight against that, and at least at NapoleonX, our take is that we have to embrace that, and we have to basically go into this direction. We're, I think, lucky enough to start from a library of performing boats that we have developed, and I'm going to show you that just afterwards. But what we really want to say is that we need to embrace this revolution. These are just 2 examples of what we are able to produce. What we're going to do at NapoleonX is really to create the asset management company that will then, in the second stage, launch various funds. In order to set up your funds, you need a strategy. So we have 2 examples here behind me. You have to understand that we are coming from the real investment world. So most of our trading algorithms basically are based on real assets. And that's the first example that is behind me, that is trading the S&P 500, which is the largest US stock market. So as you can see, this strategy, it's only taking 2 trades per month. So it's a very low frequency strategy. And there is a very simple reason behind that, and that's also one of the specialties of NapoleonX. We want only to trade on a very low frequency basis, and we also want to trade only very liquid assets. And there's a very simple reason, which is we want to be able to trade on a large scale basis. Why is that? Because we believe in the future that this cryptocurrency will be widely used by you people, but also maybe from, I would say, as investment solution from big institutional investors. And these guys, they don't, let's say, put 1 million or 10 million in order for you to trade, but they have much bigger needs. And right from the beginning, we have chosen to develop solutions that are really scalable because we know that our end user, so maybe not tomorrow or not in a year's time in this market, in the crypto market, but when these guys will really enter this market and they need time to get accustomed to this new, I would say, assets, they will come with a very large size. So we've developed solutions that are able to handle such size. And we also, let's say, use our trading strategies on Bitcoin just to give a sense of how could we also apply what we know how to do in the real asset space to the crypto space. And this is also a rather, I would say, low frequency strategy, because the second one that you can see on the bottom is basically a strategy that trades only once per week max. And on average, this strategy trades 12 times a year. So it's a very low frequency trading strategy, but it's pretty efficient, as you can see.
What is it trading then?
It's just, well, the second one is basically either buying the Bitcoin or selling the Bitcoin against the US dollar. It's just going from one position to another position, and only using these two assets. Yes? Well, the fact is that we are not going to use only, let's say, one, or we are not going to run only one bot. We're going to run plenty of strategies. Our intention is not to, let's say, only launch one big fund where we would put all our strategy into that, which would be a big mixed bag, basically, of our know-how. What we really want to do is to do separate entities that are trading very separate assets. The idea being that, once again, if you're the big guy that will come into 3 years, 5 years, I don't know exactly when, these guys, they have boxes when they want to invest. And what we really want to do is to match their boxes right from the beginning, knowing that each boxes may have some interest for ordinary people at the beginning, for people who are in the wealth management, I would say, part of the banking industry, or even for the family offices. So we really have this, let's say, this vision that in 5 years' time, the people involved in trading Bitcoins or other altcoins will be quite different from the one that are trading them today or that were trading them a few months ago. We truly believe that it's going to be a true asset class, and then with that, you're going to need to have, let's say, an organization that needs to fit within the existing framework that exists in the real world, because these guys, when they will want to invest in your fund, they have a checkbox, a checklist, and you have to tick boxes. And if you don't tick a box, they can't invest in your company. So the idea for us, as we're coming from this world, we pretty much know the type of product they're interested in, the boxes they have, and we really need to set up something right from the beginning that will be able to fit their needs. Yes?
Do you guarantee these returns?
Sorry?
Do you guarantee these returns, this amount of returns that is...
Well, this is back I would say back trading.
Yeah.
So I can guarantee the back trading. I can't guarantee the future.
But if I put Bitcoin on the year that you showed, without even using the trading boards, I can get the same amount of returns. What I am concerned about is in the future. Is this returns guaranteed?
Well, if you look at the return on the Bitcoin, because you had, let's say, you have such a short history, I can understand that it would be, as was mentioned before, the set of data that has been used to develop these bots is quite limited. So anything, I would say, automatic, doing, let's say, trading on altcoins, whatever it is, even including Bitcoins, because you have such a low, let's say, set of data, it could be problematic, because when you will see, I would say, market changes or market regime that you have not experienced so far, then you are at risk that the model that you have trained, because basically you're training a model, will not be fit for the new regime. If you look at the S&P 500, if you look at the time scale, basically this model dates back from 1994. I could have gone, I would say, earlier than that, but what I wanted basically is to be able to show or to demonstrate that we are able to generate money regardless of the market regime. So the S&P 500, basically between 94 and now, it has experienced, let's say, a bull market until 2000, with some big bumps with the Asian and Russian crisis in 97 and 98. Then you had the dot-com burst between 2000 and 2003, then the real estate bubble, and then the real estate burst, and then I would say the central bank bubble. And you can see that you're still earning money on a quite regular basis. Here we've used some leverage to, I would say, increase the return. For one simple reason is that as of today, people involved in the, let's say, Bitcoin or altcoin markets, they're quite willing to accept some risk. And that's why we're boosting the return on this particular, let's say, strategy in order to fit the risk appetite that you have as a Bitcoin holder or as an altcoin holder. This performance that we show that has been made on the S&P 500, basically with some currency hedging techniques, what you can do is transport or translate this performance that you have in here in the S&P 500 market back into whatever currency you want. As of today, you have plenty of funds that are doing something that are similar. For example, if you're a European investor and you're interested in getting a US market equity exposure, you can buy directly a fund there with the USD exposure, or you can find funds, especially in Europe, where they are hedging this currency risk for you. So there is a hidden cost somewhere, because of course when you're doing some hedging there is a hidden cost, but it's more or less related only, let's say, to difference of interest rates between the euro and the dollar. And basically what you can do, or what you can have, is the performance of the S&P 500 back into euro. Here what we are doing is almost the same thing. We are launching, or we are intending to launch funds that will be denominated in Bitcoins or in Ether. We will be going only for the most liquid cryptocurrency. And just with the same hedging techniques that normal hedge fund manager or fund manager are doing right now, you would basically translate this performance back into Bitcoin or Ether. So basically, in essence, what we would do is add some additional performance over the performance of the Bitcoin, let's say, versus US dollar, with strategies that are uncorrelated as well with the movement or with the changes between Bitcoin and the US dollar. In terms of legal challenges, the way we see things is we're going to do this in 2 steps. The first step is that we want to raise money in order to create the asset manager and get an asset management license. So this will really be the first step, because we know that the funds that will be launched in the second stage, they will be securities, and you need to have a license in order to sell these securities. And we want to have, in a first stage, basically the capacity, the financial capacity to get this license before starting to launch the funds below. But we already have the strategies for the funds. And we have, for example, shown the first 10 strategies in what we call our black paper, which is downloadable on our website, for people to understand if they want to invest in this asset manager, what they can expect in terms of funds that would be sold in this second stage, and the kind of return that they could get. This is I would say, the value proposal that we have. So you can see on the top Napoleon X, which is basically the ICO that we are proposing, and Napoleon Crypto, which will be the entity receiving the funds, that will be the one that will get this asset management license, either itself or a subsidiary of Napoleon Crypto. In terms of the funds that will be launched in the second stage, we have called them DAF, for Decentralized Autonomous Funds. I would say that's an echo with Decentralized Autonomous Organization. So the idea is that there will be some kind of governance that will be given to the funds holder in these various funds. So we intend to launch a series of funds. Investors, of course, will get performance, net of some fees, and these fees basically will be upstreamed to Napoleon X and Napoleon Crypto, who will operate the funds with this asset management license. And the bulk of the fees will come or will go to Napoleon X token holder. The way also it's structured is that it's going to be designed as a licensing fee, i.e. the funds will use the algorithm that has been or that have been developed by Napoleon Crypto or potential other external contributor, and these are basically simple codes on which they will be rented to the funds, and the performance fee basically will be the rental fee that will be then upstream to the NPX token holder and Napoleon Crypto. I'm going to go very quickly on this. I have 5 more minutes, so I'm going to go very quickly on this. What is important when you're proposing a systematic, let's say, strategy to people is that people need to trust what you are showing to them. Anyway, finance is about trust. And this is the most important asset that you have in life, that's trust. If you remove trust from the markets, markets are crashing. So for us, it's going to be the same. The way we're going to get to this, let's say, trust, or we're going to provide the trust to the investor or to the potential investor, is that we're going to use blockchain in order to design financial strategies and to, let's say, publish indexes on this strategy. That will be a way to demonstrate that what we have done, let's say, as a back trading, will be stamped by a third party, which is not, let's say, a standard, let's say, a third party. In the real world, for example, it would be Standard & Poor's, that is an index publisher, or FTSE is an index publisher as well, and these are acting as third party, but they are quite expensive, and we truly believe that with the blockchain, you can get the same third party, I would say, assurance for people who want to invest in your funds. And basically, we've launched the first index publisher based on blockchain. We have a beta version of this index publisher that is running, and that you can have access as well on our website. Yes.
So what does this index publisher do? Does that check your books, or
yeah.
what are you publishing on the?
So basically, if you come back to this strategy, it would check that every day I have the right signal saying that, this day I should buy or sell the market. These models are quite simple. They are just, they have 3 positions. You either buy the market, you do nothing, or you sell the market. And basically, this index publisher will guarantee that this is really what you're following. And it is not me as the, let's say, investment manager who is telling you, well, I think you should do that, or my model was telling you this the other day before. Everything will be completely transparent for investors and will be, let's say, recorded on the blockchain so that everyone can have a look at it. Maybe not when we set up the strategy, but after a few months, they can really guarantee that is really the strategy that is being followed by the bot.
So who is putting this strategy then?
It will be us. We're gonna develop the strategy, code them, and push them on the blockchain. I'm going to skip into that. In terms of team, I'm going to go very quickly. So I've talked about myself. You have also Jean-Charles, who's on board with us, who is more in charge of sales, but who has worked with me at BNP Paribas as a fund manager. So he has also this experience. And Arnaud, who is there, who's basically the one handling all the technical aspects, knowing that beyond the 3 of us, we have a much more stronger technical team as well. And the timeline, very quickly, we are going to have a pre-launch of our ICO on the 12th of November, with the ICO itself running on the 4th of December until the very beginning of the next year. And the idea for us is that within 3 to 5 months, we would get an asset management license. And after that, we would start launching the first funds. And thank you very much. If you have any question, of course, feel free.
Thank you very much.